Hello everyone and welcome back to another weekly market update from STP Trading. In the gold chart, considering the strong bullish trend that has formed in this area and also the breakout of the trend line and also the resistance zone, we can consider a bullish trend in this part of the chart for the gold in the medium and long term. Based on the three-wave structure of the chart, we expect the completion of wave C and the current bullish trend at the 78% or 100% levels, which could create a trend reversal in this area and we might witness the start of a corrective trend. This area could be suitable for a trend reversal or for a continuation of the correction down to the support trend line, which could act as a pullback to this level. And the support zone could also end a proper correction in this area and turn the price upward. If the price passes the 100% level, the continuation of the bullish trend up to the 138% level and the resistance zone we marked can be likely scenario for this chart. In the next chart, we have Euro USD. Based on the reaction the price had at the marked resistance zone, we expected a corrective move down to the support zones here. Considering this move, we expect a corrective and ranging trend between this resistance and support area. At the end of the chart, we expect the price after some correction and fluctuation to move toward the previous top. And if it can break through this zone, it could advance toward the previous top and the marked zones here. Otherwise, a corrective trend could form on this chart, causing the price to range between this resistance and these support zones around this price. If the support zone we specified breaks, the continuation of the correction down to the 61.8 level and also the 78% level could be the likely scenario, which would cause the correction and bearish trend to continue in this chart. Considering the time spent in this zone, if the support zone breaks, an alarm for continuation of the bearish trend could be triggered in this chart. In the Bitcoin chart, considering the deep bearish wave that had formed and the expectations we had for the continuation of the bearish trend in this part of the chart with some correction and fluctuation within the current zone and also the current support area, a reversal could form and we could see the beginning of a bullish trend. Breaking the resistance trend line and stabilizing above this area could make the continuation of the bullish trend more likely. And if the price fails to pass the resistance trend line and breaks the support zone, we will have continuation of the corrective and bearish trend. Unfortunately, given the sharp bullish wave that formed earlier and then the new low that appeared in the chart, there's also the possibility of another new low forming and a break of this zone, which needs to be assessed as the chart progresses, and it also depends on the reaction to this area. Based on the structure that has formed, as long as there is no confirmation of a bullish trend, continuation of the corrective and bearish trend can remain the likely scenario. Next, we have Dow Jones. In the Dow Jones chart, after the completion of the triangle pattern that had formed in this area, a sharp bullish trend was created. And the index still has a large distance from the support zone we marked. And it can still form a triangle pattern in this area. After the completion of the corrective pattern that could end in this area, the continuation of the bullish trend could be the likely scenario. If the index breaks through the support zone and also the support trend line, then the of the corrective down to the 61.8% and also the 78% levels will be the likely scenario. Based on the current zone here, a trend reversal could again form in this part of the chart and we could see the start of a bullish trend. If the index manages to stabilize above the previous top, continuation of the bullish trend to the 78% level and the resistance zone we specified could take place. We hope you find this analysis helpful. If you do, please don't forget to like and also subscribe. Until the next one.